Hello to all our viewers. This is the Winning Hour with Henrietta Success Jones, and we want to welcome you to another episode of the Winning Hour. With me on this episode, I have Miss Salima Jallo of Victory Accounting. But I just want to say that you have come to a place where we have authentic conversations on matters that matters the most to you, on finance, on health and well-being, on so much more, on lifestyle. And our goal on this platform is to provide as much information to you as we can possibly do from experts and from those that really know whatever topic we're going to bring in. We want to be able to override some of these issues that we have sometimes of receiving the wrong information. And without much ado, I want to introduce Ms. Halima Jallo, who is the founder of Victory Accounting. She's a certified public accountant with over 12 years of experience in accounting, taxation, and auditing in the private and public sector. Ms. Halima holds a bachelor's and master's degree in accounting and financial management, and her business specializes in tax preparation, tax advising, tax representation, and IRS audit reviews. They also provide accounting and bookkeeping support for businesses or organizations. Ms. Halima loves and enjoys providing financial education and literacy, which she believes is one of the most lacking among the people because of the sensitivity of the subject matter. She enjoys volunteering, traveling, cooking, spending time with family and friends, and a worship to God. Ms. Halima Jallo, welcome.
Thank you so much, Miss Henrietta. I'm so happy to be here. We thank God for making this broadcast possible and for you as well. You're an amazing person. You put these things together to educate people. And when you met me, I was excited about it because I'm a tax professional and I have clients and I know the common questions that they ask, like these are things that they need to have like financial education about so that every tax season they'll be better prepared. So I'm happy to be on the show. Thank you.
Awesome. Thank you for accepting our invitation to come. You have the whole hour. And let me say this, that we had a community forum before the pandemic and was hoping to do it. I believe it would have been in May. And unfortunately, we couldn't. So here you are with us again. And I want to say that when we had the last time you were on, a lot of people were really, really blessed and benefited from what you had to share. So we're going to talk everything taxes, the
Yeah.
air in the room.
Yeah.
But I guess after this session, no more. Are we gonna be in the dark? Are we gonna be, because most of us, all of I believe people working file their taxes, but you don't want to deal with what it is, what it entails, and I'm excited. I know for myself to be able to understand the tax codes, what is in it, and also this program today, this episode is gonna deal with those who want to start businesses. Most of us are wanting to start our own businesses. Some of us are already in businesses, but we don't understand the tax codes that goes with these businesses, and so we're gonna try to kind of like demystify all of these things that we have to deal with. And Miss Alima, again, I just want to say thank you. Thank you for being on the show. Thank you so much. And I want to just congratulate you again on your new business and doing, I know you did a good job. I can testify. I've had people who used you and they are just so elated and excited. And so at this point, I want to hand it over to you so we can have enough time to talk and also be able to see what our viewers have to say. You can go ahead.
Amazing. Thank you, Henrietta. And for our viewers watching, you can drop in questions and comments, and we'll try as much as possible to get to them. So we're going to go right in. I'm going to share my slides with you guys. They are pretty simple slides, and so that you can follow along with me. So yeah, so we are here today to talk about taxes, but I could not start talking about taxes without starting with this, that majority of successful people, one of their common attributes is planning. They do annual tax planning, they plan for their investments, they plan even their food, they plan their diet, their exercise. So it's very crucial for us to plan and know where we spend our money and how our money is being spent. So that's why we are here. We are here to talk about it. We'll talk about the common questions that people ask about taxes, and I plan to bring out as much as possible. And I understand that everyone's situation may be unique and distinct, and that's why you have the opportunity to contact your CPA or your tax professional to go over those unique situations. But today we are going to look at the common things about taxes that will help all of us. As we live here, we can take one or two things out of it. So again, I'm excited, and I believe you can already see my slide. Give me a thumbs up if you see the slide.
I do.
Awesome. Yeah, so everything about the slide is our tips, our tax planning tips. I just break them up into sections just to, it contains a whole lot. The IRS have over 800 tax forms and publications. It is impossible to go over entire taxes. So I try as much as possible to summarize the common things and what we should be looking at when it comes to tax time. So I hope this will help you. So we're gonna start with the first tip. My first tip is, I get this question all the time. I get my W-2, I pay taxes, I file. How come I owe the IRS? Simple. Check your W-4 withholdings. This is a form that every one of us that work for an employer fills at the beginning of our employment. It just tells the employer how much taxes they should take out of our paycheck for us before our take-home pay. So if you agree for them to take less withholdings, there are high possibility that you're going to be owing the IRS at the end. I advise people, if you don't want to owe the IRS, go ahead and get those withholdings up. Now it's simple. With the new W-4, it's just your filing status that is required. And IRS has an excellent tool on the IRS website wherein you can go in and then you put your basic information from your last pay stub, and it will tell you how much you're supposed to be paying in taxes every period. And this is extremely good also for people that receive 1099. These people, like, they don't pay taxes during the year and they expect at the end of year to get a refund. It doesn't work that way. You have to pay your taxes during the year, or you put money aside expecting to pay the IRS. Like the IRS is like debt, VAT and debt. Like, these are things we don't avoid. It's part of us. And for those international viewers, I know you as well have tax system. We're just focusing on the US right now because it's where majority of us live. But I hope you also get something out of it. So that's the first tip. Go get your withholding C and annually check it to make sure you filled it correctly with your employer. The second tip is not directly related to taxes, but it is in a way to me, paying off your debt. I know we are not doing financial planning right now. I talk about that on other forums, but we don't do financial planning right now, but paying off your debt is crucial. The reason why is that it gives you enough cash flow, money in your pocket to pay the IRS. IRS is one of the institutions you do not want to owe. Like, seriously, it's a nightmare to owe them, because the next point I'm gonna mention, you'll see why I say that. But yeah, try to pay off your debt, set up payment agreement, free up your cash flow, especially for self-employed people, people that have small businesses. You have to get enough cash flow in your pocket to take care of the IRS. And the third one I'm going to talk about is paying the IRS. Like, this is, as I mentioned, it's an institution you do not want to play with. They have penalties, they have interest, they have fees. that accrues on a daily basis, monthly basis. So you want to make sure it's worse than a bank debt, because with a bank, you just owe maybe interest, but with the IRS, you owe interest and penalty to it. So there are two major type of interest and penalties you pay, you owe the IRS. One is failure to file. Failure to file is when the due date comes. We all in this pandemic know that they extended it to July 15th and you refuse to file. That's failure. That's major. That's like 5% monthly of whatever you owe. The IRS is going to accrue on what you owe, and you're going to be paying the IRS more because you failed to file. And there's a second one, failure to pay. You have filed, but you refuse to pay. You refuse to make a payment plan. You refuse to do anything. You just ignore it as if it will go away. It's not going away. It's right there. So I advise my customers, my clients, if you know you cannot pay, at least avoid one penalty, file. Because if you don't file and you don't pay, it's double the penalty. You might as well just file, and with whatever you have in hand, pay it at that time, and then go to the website. Now it's so easy. We have the IRS apps, we have online payment plans. You can do as much with online or sending in your check without having to call the IRS. It's all done online. So that's the third tip, pay the IRS, very important. The other one is filing status. I find people get confused with filing status, but it is the main thing that determines how much taxes you pay. We pay taxes in the US based on our filing status. The tax table is calculated based on our filing status, and we have like five categories of filing status: single, married filing jointly, married filing separately, head of household, and we have the other one that is less common, which is widow or widower. But for those that are married, I always advise it is very crucial for you to file jointly, because it's higher deductions, your percentage tax rate is low, but people still want to do separately because of one reason or the other. If you are filing married filing separately, just make sure, know that you are filing as if you are a single, and you don't have all the benefit that filing as a joint married couple, you will not have those benefits. So it's always advisable to file jointly if you are married. That's my one advice. But it's not illegal if you don't want to do jointly. If you want to do separately, you can go ahead, but it will save you more on your taxes if you do jointly. Yes, so another tip on this marriage couples, like when you get married, you change your name. It is very important for you to update it with the Social Security Administration, because the IRS go with that record. They will process your returns, but it will take extremely long time. So you don't want that delay. You want to make sure that you update your information with the Social Security Administration, and also change of address. You want to update with the post office to stay updated, your information that the IRS will receive. So before I move on to deductions and credit, I'll turn it over to Henrietta and see if she has any questions for me.
Thank you so much, Alima. Yes, I do. And we're just going to go slide by slide because it's a lot. But at this point, I have a question. Married filing single. I guess this is something that husband and wives have to come together and talk about. But I just want to highlight the fact that as you file married, filing single, you're paying a much higher tax, right? That's what you said.
Yes, you're paying separately. You are paying like if you are paying as if you are a single. You're paying much higher taxes.
Okay. And I wanted you to also talk about what is the benefit of filing a zero status, because most times people want to be able to file the zero status, but then it's like, oh, they take a lot of money out of my check every, what is the benefit of that compared to filing? The status is that your withholding is whether you're just by yourself or you have a dependent or like, married and all that stuff. So what's the advantage there?
The advantage is peace of mind, because if you don't want to owe the IRS at the end of the day, you want to make sure that that withholding is that, as you say, zero. Now with the new W-4, they don't call it zero anymore. It's based on your filing status. So if you are single, you make sure you select single on that form. If you are married and you plan to file jointly, you select your filing status, and they will take the maximum amount of tax to avoid at the end of the tax year for you to pay taxes due.
Okay. So does that mean that you don't put zero filing anymore?
No, with the new one, no. It's your filing status that determines.
IRS will write it off as one.
Yes.
Just you. All
Yeah.
right.
If you're single.
Because I know at the end of the year, when you do zero, you get more money back, right? It's
Yes.
back to you.
Yes.
And
they have a good calculator on their IRS website wherein you can go and estimate your taxes. Like if you're at 1099 and you want to know how much you're going to be owing and want to start paying quarterly payments before the end of the year, you can go and check that out.
And one of the other thing I wanted to hit on was that paying off the debt. We're not going to go into that, but we have a guest coming next week. We're going to talk in depth about debt, how we can pay off our debts, how we can start to save towards various like retirements and all that stuff for those that will be interested in it. But we're going to have a guest next week to do that. So thank you so much. And I'm glad you've highlighted this. The other thing that I wanted to highlight again, and we're not going to go deep into it, is just the I didn't know how much percentage they will charge you if you don't pay. And you're saying it's 5%. And that adds up quickly.
It adds up. It's 5% if you don't file, but it's 0.5% if you don't pay. And this is calculated monthly.
Plus other penalties.
Yes.
Okay. All right, Ms. Salima, I'll let you go to your second slide.
Awesome. Let me move on. So now we're going to talk about the fun part. This is the part you want to know about. This is the part that reduces your taxes, credits and deductions. Like, this is what you really need to know, and it depends on your situation. Everyone's situation is different. So there are many, as I said in the beginning, many tax codes, regulations, publications, but these are just a few common ones I see across the board, and it's common with people around. So we're going to start with credits. Credits are things that the IRS, the government gives. It's like free money they give you for having children, for going to school, for being a low-income earner. So as you see, the name that is under the credit, child tax credit, it says it for itself. With child tax credit, you get up to $2,000 per child under the age of 17. As soon as they turn 17, you kick them out of your house. You don't need them anymore. I'm just kidding. You still need them. But yeah, so they encourage you to have children, and the government gives you money for having those children. And if you know that you can, even when they are 17 and above, you can still claim them as a dependent and pay and get $500 as long as they are living under your roof and you are taking care of them. So to run through this for us not to take time, I'm going to step into the education credit. For most of us, I know at one point or another, we went to school or we're planning to go to school, an excellent credit. The American Opportunity and the Lifetime Learning credits, they're excellent. Like for the American Opportunity, you get up to $2,500. For the Lifetime Learning credit, you get up to $2,000. The difference between the two is that the American Opportunity, it's 4 years post-secondary education. That's your college education. You can claim it. You can't claim both. Then after it's been exhausted, then you can use your lifetime credits. Lifetime credits, you can use it up to 98 years, anytime you want to go to school. Like, You can use it for your master's, for your PhD, for any sort of higher education. This is a credit that is there to encourage people to go to school. And the earned income credit, this credit is for low to moderate income earners. There's a threshold. So if you make a certain amount that is low, this credit is very good, and it depends on your income and the size of your family. The more children you have and you are making a low income, the government, I would say, pity you and say, okay, let's just help them out and give them this amount of credit to help sustain them, because with this income, it's hard to take care of this amount of children. So it's a good credit that encourages people and helps people that are the low income earners. So we are done with credit. These are the three major. And again, I say there are lots and lots of other credits you can talk to your accountant or tax professional about, but these are the common ones.
Okay, and we will have your information at the end of the program so that people can reach out to you. You do have consulting services. I can do it via Zoom and different outlets. But I wanted to just tap into the American Opportunity and Lifetime Credit Learning. And you said that was $2,000 for the American Opportunity, right?
The American is up to $2,500.
And this is to encourage, and you know, I really will encourage people to look into this. And there are some courses you can start. It's way below 2,000 for working moms out there. Also, I know a lot of us are familiar with the dependent care, but there's also something that I think I would just share. If you are in school, living in Maryland, and Ms. Salima, you can touch on this, please. I think there's $1,000 that the state of Maryland, gives up. Yeah, the federal government actually will give you as a tax break for those that have loans. If you have loans, I cannot remember the exact amount, and I'll put that information at the bottom of the screen when the program is over. But if you have a loan with the federal government, there is $1,000 that can be given to you. They're called the tax relief educational loan. So please, can you just comment on that?
Yes, you're very right. It's like $1,000 if I can still remember. That's a good one, and it's by state. So that's the state of Maryland. It might not apply to other states, but yes, you can look into that. And yeah, feel free to share that information at the end.
I will. And it's something that has to be done by September.
Yeah, right.
It's coming up there. I mean, it's a $3,000 that you can make use of. Okay, we tell him, we just keep it going.
I like that. Thank you. Maybe you should join me in my practice.
I'm for it. Mommy went to school. Okay.
Okay, over to deductions. Deductions are also extremely good. I'm just going to touch base on the two types of deductions. We have standard deductions, we have itemized deductions. So with the new tax reform that started in 2017, 2018, they increased the standard deductions tremendously. This is the government discouraging people not to itemize rather than take the standard deductions. So now over 80% of Americans do the standard deduction, which is like twice what it used to be, eliminating all the paperwork, all like the putting together things for itemize. And this is good. I find it good not only for the taxpayer, because when you itemize, make sure you have your records just to support that. So itemized deduction, we are going to touch on itemized deductions. It's something that you really want to look into if you are a high income earner, if you earn a lot, because it includes your state taxes, real estate taxes, if you own a property, these things like home mortgage interest, things like medical expenses, things like charitable contribution. So a whole lot of stuff go into this itemized section. And if you're going to itemize, I always tell clients that get your stuff together. Like if you know you have a medical condition that you spend a lot, out of pocket, make sure you get your records, your receipts, and anything related to it, because they can be part of that deduction. If you have a home mortgage interest, all the homeowners watching, the 1098 you get from your bank, it has a section for interest that can be deducted. And for us, some of us, we give to our churches, we give to institution charitable contributions around. So this is also good. You know, you get your statement from those charitable institutions, your church, and then, or you can get it from your bank statement. As long as you can support it, you can be able to deduct those. They reduce the deductions, the itemized a lot, because the government increased the standard. So things like miscellaneous expenses, like tax preparations, like uniform, moving expenses, union dues. Remember all those little things you could deduct, meals and entertainment that is not reimbursed by employer, travel. We no longer have them, they're gone, they're gone. So that is the balance. They increase the standard to take away a lot of the other benefits of itemizing. So that's the trick right there. But I know a lot of people also that itemize, and especially that they have their home interest. Some have medical conditions, some give some are very charitable, they give a lot. So they always itemize. So yeah, so this rounds up credits and deduction. Ms. Henrietta, do you have any questions for me?
So the only thing is that a good thing that they've taken away that portion of it?
Well, it's a balance. It helps those that don't need it, but at the same time, for people that do itemize, it hurts them. Because even with the state taxes, they maxed it at 10,000. There are people that will pay way more than 10,000 in their state taxes a year. But the government say you can't. Before, it used to be, even if you have paid 20,000, you can write it off. Now they said, nope, 10,000.
And even with the charitable giving, you were telling me that it's also maxed at 10,000, right?
No, that one, it's you can't give above 60% of your aggregate gross income, like your total income for the year. It stops at 60% of your total income.
Okay.
So, yeah. Mm-hmm.
All right, we can roll.
Making progress.
Getting there, and we are going to. I'm trying to see I can do my phone without the noise, but I think today.
Yes. We'll see. Well, yeah, they're saying it's really great tax information. Blessed day, woman. And yeah, people are commenting. Let me move on to the next one. The next one is very interesting, and we're gonna spend a little amount of time here because these are tax updates. These are like, some are new, some are because of the pandemic. Some of this tax laws have been updated to take care of the current climate. We all know what we are in as very unprecedented times. So a tax update that IRS have been hammering on is scams. We all know that we should be aware of scam, even without the COVID-19 situation, but it heightens, like the crime, like these fraudsters, these schemers have taken advantage of a lot of people, especially with the stimulus check, with all this going and updating your information on the IRS website to get your check. So what they do, I'm just going to highlight the few scamming schemes so that you'll be aware in case someone tries to scam you. One of it is like, we must be alert of fake emails and websites to steal our personal information. They will come as if it's from the IRS. IRS don't send out emails. So don't respond to those emails. Don't click on links you don't know. They're trying to scam you. And also, they have targeted this COVID-19 situation by setting up fake charitable organizations. They know people at this time, you know, they are well-intended people want to give towards what is going on. Fraudsters have started setting up this fake charitable institution claiming that they are using it to help people that are suffering from the COVID situation. It's a scam. Validate every charitable organization you give to. And also the IRS says they have been impersonating the forms. You know, they will call fake that this is a call from the IRS and claiming certain things that you owe this. Don't believe them. IRS hardly call. They don't call. You know their letters, how we look like. Yeah. So we have to be careful of these scams, and they have been saying it over and over. Another one is social media. We have to protect our social media. They will come in social media and they will try to trick people on social media. And finally, they try to steal our economic stimulus package a lot. This was very high, that it was so much that the IRS put out alerts that people who claim to change, they will come like a false tax, they'll prepare false tax returns, provide your information, redirect your check to them. So a lot of people were scammed. A lot of people, even people breaking mailbox. Like it was serious, but yes. So I wanted to touch on that. So because we are still in these times, and I believe it's still going to continue. The scamming is still continuing in every area, not only with the IRS, in other areas also. We must be aware. I had an experience a couple of years ago. I was scammed. And one way you know, they put so much fear in you. When these calls come in, you panic. And as soon as you start feeling that, you should question, like, why am I so afraid? And just cut the call off. They are scammers. So yeah, that summarized scamming. And another tax update is retirement account. I know most of us have not gotten to that age of retirement, but I just want to touch on it for any reason someone is at that retirement age, 72 and over. This is something that they did because of the COVID situation. There's something called the required minimum distribution. After you reach a certain age, to take out your contribution and you don't, they penalize you for that. But because of this situation, the IRS says, no, we're not going to penalize you even if you don't take out your minimum distribution that you are mandated to take out as when you reach a certain age of 72, we are not going to mandate you. So that's one update for those that are interested in retirement accounts. So the next one is unemployment compensation. We all know people have been on unemployment for a long time because of this situation. But the thing people fail to realize is this checks you receive, you're going to be taxed on it. It's just like 1099, it's just like regular income. So as much as you are receiving it, to avoid surprises during tax season, it's better for you to start making payments now. Set up a way that you will pay during the year rather than wait at the end of the tax year while you file your taxes, because these unemployment benefits or anything, these benefits are going to be taxed at the end of the day. So those of you that are receiving these unemployment checks, just be mindful. Yeah, so the next one is amended tax returns. This is individuals that made mistakes on their 2019 taxes or their prior year taxes, and they want to go and fix that error. Before, it used to take a long time because you have to print it out and mail it, but now the IRS, which is for the first time, they have decided that we can electronically file this amended return. And as a tax professional, I find this amazing. It saves my time and it's faster to them to process it for the tax preparer to get a refund or pay their taxes. So it's very good. It's a good update that the IRS has made. And finally, IRS mail. I know this is one of the things that nobody wants to receive in your mail. You don't want a letter from the IRS. You just want to prepare your taxes, get your refund or pay them. But once you get this letter, I'm going to talk about some do's and don'ts with this letter. I urge you, do not ignore it. Don't ignore this letter. This letter is extremely important. It has specific instructions. There are specific issues and instructions that you have to look at. So please don't shred it. Don't put it aside thinking that it's the IRS. I'm going to ignore it. No, no, no. Don't ignore. Remember, I talked in the beginning, interest, penalties, and fees. Keep that in mind. You don't want to ignore these letters. And the second thing is don't panic. Don't panic. Like, seriously, the IRS reached out to us. Yes, of course, sometimes we owe them money and they're trying to collect it, or we prepare our returns in a certain way that they require additional information. Maybe we claim some things that based on their reasonable judgment, they're not satisfied and they want to ask for more additional information. So it's not all IRS letters that are bad. Some is just information notifying you that this and this is what they are doing with your returns. So do not panic, just take a breath and just look at it. See what the issue is and what the specific instruction is. So yeah, and also another don't is don't reply unless you are instructed to. And as I said, it's not all letters that are warranting you to do any. Some are just for information purposes. So if they don't tell you to reply, you don't have to reply. If IRS wants you to reply, they'll state it. You have to reply to this letter. You have to provide additional information. You have to do whatever they want you to do. So that's the thing. Don't reply unless they instruct you to do so. And one thing you want to do is take timely action. That's a do. You want to take timely action. Remember, penalty, interest, and fees. You don't want it to be accruing on you monthly and every day. So you want to take action. You want to take timely actions, you know, because this thing can dampen what you owe. It can increase it. So to minimize additional interest and penalties, that's the reason you should take timely action. And finally, you want to contact your CPA, tax professional, whoever did your taxes, and for them to respond with you appropriately if you don't know how to respond, because I'm sure most tax professionals are familiar with these letters and they'll tell you exactly what to do.
And that's why I'm so excited about you, because one of the things that Ms. Halima has done is that she has made her fees so reasonable. Because somebody earning, minimum wage job, and you tell them about a CPA, they're like, what? I can't afford it. But you have made your prices so reasonable that anybody can come to you. And I know that this year when you started off with great discounts, but I want you to talk about, to be honest with you, I'm glad you're telling us the age of retirement, which is 72 years. I want you to also go into a little bit about what is it that IRS is expecting us to take out, that when you don't take out, you're penalized.
So they call it required minimum distribution. It's calculated based on your whatever income you have is calculated based on that. I don't have those numbers. It's a lot of them, but it's on the IRS website. There's a minimum amount you have to take out after retirement, and it depends on your income. So someone making more is required to take more. Someone that contributed during their life more, they're required to take more. Someone that contributed less, so it's based on the income. It's not like a fixed amount.
Okay. Thank you so much. One of the things that I've learned about the IRS is that they love you to communicate. Mm-hmm. They're humans like us, and I know it can be intimidating, but they love you to communicate with them. Right. Before you get to the point where they have to come up to you or write you a letter. Mm-hmm. It's a tough time for a lot of families with jobs. So right. I think you mentioned about taxes, that people are going to be taxed on the unemployment check. How about the stimulus check? Is there a tax on that or no?
That is the $1 million question. Like, there's no clear guidance on that as yet, but it is not been stated. So I will stick to no,
No.
unless otherwise stated.
Bad news is good news.
Unless otherwise stated, it's not clear guidance. And don't quote me because it might change.
I'm the tax expert, so we'll take it. But can you said that at this point in time, how can, I mean, I don't know how people are going to do it because if stimulus checks, school is open right now. There are families who are hoping to pay school fees and get stuff for their kids. How would you advise people to go about paying this amount before it gets to the point where they're having a lump sum at the end of the year?
That is very good question because number one, you can use the W-4 withholding calculator we talked about in the beginning. That will tell you how much you're going to be owing because it calculates based on your income and your tax bracket. Once you get that, take that amount and split it into 4 and make 4 payments out of it. And you can make those payments on the IRS website. It's installment payments. Anybody can pay their taxes through that. You just go and set it up and you make those payments during the year. And again, your accountant or tax professional can help you with that.
Okay. And Ms. Salima, you'll be able to provide us where to go on the IRS, right? Because it's a whole city by itself.
Yeah.
Oh, okay. Yes. And so with the amended tax, is there more tips that you want to tell us about with the amended taxes? Because one of the things, like I said, we want to make sure that at this point, because things are so, just up in the air, a lot of confusion for family members. But like I say again, you are there as a CPA. You are there with such. I remember when I first met you, you were referred to me by a dear cousin of yours, and you said to me, I just want to give back. I just want to give back to the community. And thank you so much, you have. But I guess people can reach out to you because many a time, like I said, that's why I wanted to bring this show on. We are in September. In 2 months, before you know it, it's tax season. And, sometimes, like you say, they might come back to you. But let's make sure that we have credible people doing our taxes. Let's make sure that we have people who can stand with us when there's a question and not leave us, out in the field. And again, I want to point to you that thank you so much for making yourself available to the community. Yes, ma'am.
Okay.
You can go to the 5th slide.
Yeah, so you asked about the amended, right? So yeah, the amended is very good. Like, there are times people don't want to touch their returns after they prepare it. No, you can always go back and amend. Let's say you were supposed to claim something you ignored while filing. You can go and amend. If there's a deduction you knew you should have taken or a credit, as we talked about, you can go and amend. It's completely, with the IRS, you can amend 3 years. Like, you can even go back 3 years and amend if you want. So it's good, and they made it electronically. We makes it faster for them to process it.
Okay.
So yes.
Thanks so much for that.
Awesome. We're making progress. So I can move to the next slide.
Yeah.
Awesome. Thanks. So yeah, let's talk business. We've talked about the individual, and all the stuff that I talked about individual, business owners can implement it for themselves as well because they as well are individuals. But this slide is going to talk specifically about our business deductions and how business owners, whether you are self-employed, whether you are LLC, whether you are home-based business or corporation, there are just certain housekeeping things you as a business owner must take into consideration for tax seasons. And we're going to talk about some of them. So business deductions, these, as we know, we looked at individual deduction, they are the good things. They are the ones that reduce your taxes. So business deductions, it's a big savings for businesses, small, large, whatever size. What the IRS says about this is you must make sure that these expenses are ordinary and necessary. Ordinary in the sense that they are common and they are accepted in your industry. Like, take for example me, my business. I'm a CPA, accountant, tax professional doing taxes, which is one part of my business. One common, ordinary, and necessary is my tax software. I can't go and start claiming like a medical equipment when I'm an accountant. I have no business claiming that. So me claiming an expense that is not ordinary and necessary raise a red flag with the IRS. So business owners, just know whatever you are deducting as business deduction has to be ordinary and necessary. If you are selling ice cream, your ice cream truck, whatever it is that is related to your business, if you are a doctor, your equipment, if whatever field of study you are or field of business you are, make sure that those expenses are ordinary and necessary. And there are times we commingle, like our expenses are generally not only business. There are expenses for business owners that are mixed, like they are both personal and business. The IRS says you have to split. You cannot claim personal expenses. You can't take your girlfriend for lunch and talk about life and claim those expenses. But you can go on a business lunch and claim that as an expense because it is ordinary and it's necessary. It's necessary for me as a tax professional to go out on a lunch with a client and claim that deduction for a meal or entertainment because that's part of my business. I must talk to people. So bear that in mind, that you have to separate you have to divide your personal expenses from your business expenses. And these are just some common business expenses that you can deduct. Your business use of home. For those that are doing their businesses at home, like me, I know I do at home, you can take the part of your home that you do the business, and then you can use that portion and deduct it. There's a way of calculating it. I'm not going to go into that. That's like the real accounting stuff where you take the square feet, multiply by so many things, but we are not doing a tax class. But yeah, you can deduct your business portion of a home. And if you don't have a home, your rent, you rent an apartment, you can take a portion of that as a deduction. You can take a portion of your water bill, your phone bill, your internet, can be deducted as part of your business expenses. But bear in mind, you have to be very disciplined doing these things, because one of the areas the IRS look more into is this schedule of deduction of these expenses. And also the business use of your car. You have to track your mileage. Find a way of tracking. Like for me, I have this free app. It's called TripLog. You can look into it. You just set it and it logs your trip, and you automatically calculates your mileage for you. But there are other apps out there that calculate your mileage. It's very important if you're using your car for business to have something like mileage calculation for it. Also, you can have, if you are really want to take advantage of these deductions, you have your receipt for your gas, car maintenance, even car wash, even parking tolls. All these things you can keep records of, and you'll be able to deduct it as a business owner. And for those that have employees, for business owners, you can deduct what you pay them. And also meals and entertainment, as I talked earlier, like my business is expected to meet clients. So I'm able to take my meals and entertainment as a deduction. Even my trips, if I take a trip for a seminar on taxes or whatever kind of seminar that's related to my business, or travel to see a client, I'm able to deduct because it's, again, it's necessary and ordinary. It's expected of my business. And other things like your retirement plan as a business owner, your interest, tax, insurance, just like things we talked about in the personal, in the individual, you can translate it into the business and be able to deduct those expenses. And there are many publications. 535 has many deductions. This is just a small common portion. You can go in that publication and see an extensive list of deduction. We will not be able to go over everything. This is just like a small portion of it I wanted to touch on. And okay, we talked about business deduction. Now record keeping. I cannot overemphasize this. This is extremely important for business owners to keep records. I don't know how you want to keep the records. Some people use Excel. There are accounting softwares like QuickBooks. There is Wave, which is free. There is whatever you want to do. You want to keep records of your income and expenses. You don't want to commingle your funds. Number one advice I give to my business clients, you want to have a separate account. Don't mix your funds. Like, don't mix your personal income, your personal account with your business account. Try to separate it. It gives you peace of mind at the end, because you will not be scrambling to say, oh, was this business? Was this personal? No, you have them all in one place, and it helps me as an accountant and as a tax preparer to be able to validate those quickly, rather than asking you and you'll be producing them in different accounts. It makes it easy, because as I say, you don't want to leave room for in case you get audited and you cannot provide the IRS with any support. So let's be mindful of that. You know, you can use Excel is good. Like Excel, if you're a really small business, you create an Excel spreadsheet. I create Excel spreadsheet, and yeah, you create your Excel spreadsheet and you have your income and your expense, and then you track it. And the next one I want to talk about, reporting income. We've talked about the deductions, which are good, but I come to notice that people don't want to report income. And we all know why business owners don't want to report income, because they don't want to get taxed. But it's extremely risky, and I always say it raises a red flag if you are deducting all these things and you are not reporting income. Like you just put yourself in the red zone for an audit. We have to report our income. As much as we want to take all these deductions, we have to show the IRS that we are making money, because they know we are, and they have a way of finding out. So yeah, that's just my advice. Report income, report what you make. And the final one I'm going to touch on is try to know what tax returns you need to file. I've spoken to business people. They have their business register, but they don't know what's required. Just know, based on the type of business structure you have, there are requirements. Common business structures are sole proprietorship. You have the partnership if you registered it. You have your corporations and the S corporation. You have your LLC. You have to know the tax. That's why you have to get your tax professional. You have to know this before time, like what is expected of me, what is required in these tax forms, what do I have to put together when tax time comes, like how, because if you ignore your business taxes, you get penalized. You remember penalty, interest, and fees? The IRS don't play with that. And they are very, even with businesses, their eyes are even more open, because they know there are loopholes that people want to take advantage on when they have businesses. So that's all that said. This is the end of my presentation, and I'm gonna turn it over to you, Ms. Henrietta.
So much. Thank you so much. I have a question, and please, yes, I'm glad you put up your contact information. You talked about you know, the different ways to keep our records, because business is all about records. I
Mm,
know
mm,
some people are field people. You can put them in the field and they will sell whatever it is. Give
mm,
them the paperwork? No. So they
mm.
have shoe boxes, uh, which I would say if you have to be dumping the receipts in those shoe boxes is good. But you mentioned about QuickBooks. QuickBooks can be intimidating. It can be overwhelming. But I know you've mentioned before that there is a online version, which is kind of reasonable than buying the actual software that runs you up to the 300s. And that's much easier. And that you can, as an accountant, you can share that online and be able to, even I know you have services with business people as doing their bookkeeping for them, right? Can you talk on that a little bit more, please?
Yes, you're right. QuickBooks can be intimidating. It's the leading software. It's the leading financial software. They are great. They are excellent, but not everyone can just go in and use it. You need help to start up, even knowing where to put work. So they have what is called QuickBooks Accountant, which I'm looking into, and this platform that you are talking about, Miss Henrietta, is that if you are my client, let's say you are my client, and you decide to use QuickBooks, I, as a QuickBooks accountant, I'll be able to go into your account and review whatever you put in, and also guide you. I can even also input for you if it depends on the level of service you require of me. So it's an excellent thing that QuickBooks does. They don't just leave you in the dark, and it's online, of course. You have monthly fees, and for small businesses that can afford it, I say, don't worry about it. Get Wave. You know me and you know Wave, right? Wave, Wave is free as long as you, you are not exorbitant. Like you don't do so much. You know, once you start doing so much with these softwares, of course they charge you. But and also get an Excel, get an accountant or someone to do you an Excel spreadsheet, and there are many ways to record keep. And the shoe boxes, like if you want to use your shoebox, use your shoebox, but just make sure that you, at the end of the day, that method is archaic, is getting old. Just take that your shoebox to the left or to the right and put it into an Excel spreadsheet and have it in paper. But yeah.
The wave accounting, I know that you know, reaching out to you, um, you know, trying to do these programs, you know, we've come to know about the wave accounting. And with wave accounting, researching it, it's free. And in wave, the good thing is that you know you can scan your receipt and put it in your system.
All right, right.
You just, all you need to have is a
Yeah.
phone. And
Yeah.
take your picture of that receipt as you have it and just
Uh-huh.
enter it. It's very simple. And that's one thing that I was really wanting to learn about, so that our viewers will have easy access to some of these things. And the service that you provide, or you can provide to those that will reach out to you to maintain their, you know, I've learned one thing:
Mm.
stay in your lane. Stay in your lane. And in looking about at the system here, coming from another,
Uh-huh.
looking at the system, I remember I was telling you, I said there was this lady that used to come on the radio and said that the one thing I can do is to talk, to preach.
Uh-huh.
The computer, I cannot do it. So I have to hire somebody to do all my computer work. Stay
Uh-huh.
in your lane. Like Miss Alima said, take a day in the week and enter all your receipts. Assign yourself a day, a time. What's the best time for you that you know you can concentrate? Because like I said, some businesses are sales. They are out all day. They come back, they are tired.
Mm.
So you have to decide what strategy is going to work best for you. But I know the wave accounting, there's Sage also. There's
Mm-hmm.
Sage accounting that you have to pay for. And with Wave, there's so much you can connect it. They're just coming up with a lot of stuff. And I had to research that for this program. It is crazy, but we leave it at that.
It's still the leading.
Yeah, the more you go into QuickBooks, the more you love it. But for those who are starting afresh and have a small business where they may not have the funds, please, there are many more options. Also,
Right.
the trip logs you talk about. I wanted to ask you, there's something that other than the trip logs, does that record your miles? You know, do you have to put it in, or you just have to put where you're going to, and that will record it for you in the app?
So you just set it up, and there's something in the app. Once you start your vehicle, it start recording it. It's nothing you have to do about it.
Okay, that's good. Okay.
Yeah.
And also you talked about the Form 535. I think it would be great for people to know that, is that form going to tell you everything that you need to know about the business deduction?
It gives you a comprehensive list of a business. It talks about all the business deductions, yes. And you can get that on the IRS website.
That's Form 535.
Right.
That's so easy. I mean, they've done a lot of stuff, I think, to make things very easy.
My email is here. If someone needs more information or needs this, you can email me and I can send you the links to some of the things I've talked about. I know it's a lot when it comes to taxes. I mean, it's a lot. Like, just send me an email and I can send you those information. My email is right there, alima@cpavictory.com.
And also with the deduction, as you talked about, people that have homes, I know that the square foot of a home is very important, but you see there is calculation online. People can reach out to you if they need help. Like I say, your prices are very affordable in the community. But also, I wanted to talk about the deductions for those that rent. You're talking about light, you're talking about water, you're talking about the phone bill. What's the safest way to go about this for those who've never done it?
Well, the safest way to go about it, you first of all need to know how much you pay on those things. And once you get that information to your accountant or tax professional, based on what the size of the square feet of where you do business, because it has to be allocated to majority. Like, you can't use your bedroom as a business, a place. Like, it's not accepted. But like, a portion of your apartment secluded for that business will be calculated, and based on that information, they're going to do a proportion of those amounts that you paid to go into your the business expense section. Like, maybe it's going to be 50%, maybe it's 40-60. It just depends on the square footage.
Okay, so when you say secluded, it's not as it's enclosed, but you can have your dining area, right? And you assign it to that part of it that this is my business area. Am I right?
Right. Like, you have your decks and you have your desk, like, and your chair, and this is your assigned. You can do other things there, but it is assigned exclusively for business. Or your basement. I know people that use their basements for that. So yeah, it's not, you can't use your kitchen, or you can't use your bathroom. Nobody will use that. Or your room. Those are not business locations, you know. But yeah.
All right, great. Well, Miss Alima, the hour is fast spent, and
Wow.
we have just scratched the surface to get people kind of like thinking, going back to those amendments. Remember, you have 3 years. And just, I love the part about the educational loan and all that, educational taxes. But our hour is fast spent, and I just want to say thank you. Thank you for coming up, coming on to the program. Thank you for just, you know, kind of enlightening us and causing us to dig deeper. I think I hope here to our viewers, like around the world, but especially for us here in the US, is that IRS has come on as a friendly services that we can all benefit from.
Right.
The more you know, the more you know.
The more you know.
Knowledge is power. And for most of us who are immigrants, not raised up in the system, and even those who are born here, but never taken the time to look at the tax and all the tax codes. I know one thing that Ms. Salima told me was that this year, the tax system is kind of a little bit easier than in other times. And also you have those that will not agree, but you know, it's my opinion. And but on the same token, I just want to say thank you. I want to thank our viewers for joining us. Our hope is that you were really enlightening, you were really blessed by this program. And hopefully, for those of you who are considering to open a business, now you know. And go the next step. Ms. Salima's contact is here, email, and our website is here. She will gladly be able to do a consultation with you and be able to provide you the help that you need. And with this, I want to sign off. Again, my name is Henrietta Success Jones, and this is The Winning Hour, a place for authentic conversation on matters that matters to you, such as your taxes. And until then, I see you next week. Next week, we're going to have a great programming with a very great financial company that I've known for over 25 years. Very credible. It's a nonprofit, and they will be talking to us about debt and all that stuff, how we want to go about it, trying to pay off debt, and much more. I'll be putting on the flyers. So until then, bye-bye. Take care. Have a good day.
Thanks, Miss Henrietta. Bye, everyone. Thanks.
Thanks for watching.
Thank you.